All right, I've got a great show for you guys today. Welcome to the Stocks with Josh show. I'm going to be covering 4 stocks in a very turbulent market. We're going to be talking about Amazon because they're reporting earnings. We're talking about Google, AMD, and NIO. Now, NIO doesn't really fit into the group of big tech stocks, but there's something going on in the charts that I think I want to share with those who are trading NIO because it's super important. It's what I would call a pivotal moment for NIO, and I don't even have to show you much, but let me just explain it to you. So we know that we've come all the way off of the lows that were set months back, and we hit a new local high, which was very bullish for NIO. But unfortunately, we've come all the way back to those same lows today. Now we're sitting around $7.31. And the last time we got down to this level, we got to around $7. And here's the point I want to make, and here's what I want you guys to watch out for those who are trading NIO, is that we cannot make for NIO, the stock should not make a new local lower low. If it does, it eradicates the new local high that was just made in the last couple months since July. So right now, it's at a critical point. If we make a new lower low, and that would be made by breaking beneath $7, then I would tell you guys that any bullishness has just gotten taken off the table, because this thing could go down to $1, $2. That's what that means. It's got to maintain a higher low. And so it came down to $7.31 over the last couple of days. And I would say watch that level super carefully because it shouldn't go any lower. We shouldn't creep closer and closer to $7. So I wanted you guys to be aware of that. Now, this could be a great place to DCA if you're a long-term NIO holder. But in the same thought process, I would say if it does break beneath $7, then it could be a situation where you'd want to consider unloading all of your bags because it's breaking down more. And so those are my thoughts on NIO. All right, let's get into some of the other bigger plays today. Real quick, thank you for hitting the like. Yesterday, we had a great live on this page. I want you guys to go and check that out. It was the Stock Squad, me, Stock Up with Larry Jones, Keenan Grace, Stock Mo, and myself. It was a great live. We covered a lot of stocks and things going on in the market. I'm going to leave that at the end of this video. But let's just start off by looking at the heat map of the S&P 500. And what we see is that it's really the Magnificent Seven that are getting the most punished. They're all bright blood red, and the most concerning one out of all of them is Microsoft, giving up all of its gains. And that's what the title of my last video was, that big tech was selling off whether they have a good report or a bad report. Now we still have some big tech to report, but here's the question. Has it already sold off? Are we at the point where we're at the bottom? And so if they came out and did really bad, yes, it could go even further down. But I think at this point, the market's not given any of these companies the benefit of the doubt. We could be getting into a position with Amazon and AMD where it favors the upside. But I'm going to break that down in the technicals here in just a minute. Let's just start off with AMD. These guys are reporting earnings next Tuesday, October 31st, Halloween. And so the question is this report of earnings going to scare our portfolios? At the moment, I don't have any swing trade AMD because this morning when it popped, I sold it out. I told everybody that we could bounce off of support at $93.70. I gave that in the Discord. And I also mentioned that we would likely go up and hit resistance at $96.80. And that's exactly what we did. And that's exactly how I played it. And I was able to play it for profit despite the fact that we've been in such rocky markets. Now, when I went into the close yesterday, if it hadn't bounced today, I would have been in trouble. But it did bounce. It did kind of what I expected. And I was able to walk away with some money. Now, here's what I want you guys to understand about the AMD chart. Between support and resistance, and likely the market is going to try to figure out whether it wants to go further down or whether it wants to slowly climb back up. And so I'm expecting that we're going to move sideways and slightly to the upside on AMD. But the support that the only support beneath us right now is $91. And so if the market doesn't like the earnings, then this could fall all the way to $91. And I would say that it probably would find support there and bounce. But here's the positive bullish story for AMD. If we get a close back above $96.80, it's a super easy path to 100. And so I'm going to be waiting for the stock to tell me which direction it wants to go. Beneath $93.70, it's obviously something that we're going to short. Above $96.80, it's something that I'm going to want to go long in. And here's a pro tip for you guys today, and I want to make this really clear because I know there's a lot of beginning traders out there. We want to see these stocks give us a higher high or a higher low. Okay, so what we're looking for right now is we're looking for higher highs and higher lows, or even just some higher lows, showing us that it's rebuilding, consolidating, and getting ready to go back up. Don't try to catch a falling knife or catch the bottom. You want to see at least a higher low followed by a higher high, and that would be 2 candles before you start scaling into positions, because at the moment nobody knows which direction these markets are going to go, because obviously the market's been rocked over the last week. It's been an extremely bearish week. Now you know that I'm playing some trades and I've got some risk on. I've taken some big risk positions, but if you are new to these markets and you don't have the money to scale and you don't have the money to roll options forward and increase the investment amount that you've got going in, then the best thing that you could do is wait for the markets to show you. Check out the 4-hour candles, look at the daily candles, wait until we make some higher lows and some higher highs. Then you could invest with some confidence. All right, up next, I'm going to be talking about Amazon and Google, and I think those charts are even more interesting than the ones I just gave. But before I do, quick station break for the Discord. Guys, I am giving these plays and technicals in the Discord. The Discord is the Stock Squad. It's 4 of us. All 4 of us are contributing content to that Discord. And I'm putting technicals in that regarding the trades that I'm going to do in the morning. I'm putting those technicals in the night before so you can have some time to digest the moves before they even happen. Click on the link for the Discord and check it out for yourselves. I also wanted to give a shout out to the Moomoo app. If you need better trade tools and you're trying to get into this market and you're trying to learn how to do some of this investing and even some of this swing trading, I use the Moomoo app. I also use Webull. There's a link for both of them in the top pinned comment. Moomoo right now will give you up to 16 free stock for opening and funding an account. And on that app, I host a free chat group. It's called Stock Josh Fam. You should check it out as well. Okay, let's get into the Google chart. Now, I'm going to tell you guys, I've got a really big Google investment going right now, and it was up this morning, well over $1,000 shortly after I entered, but I decided to hold because I'm looking for a bigger move. It did come back to my starting price, which happens, and I loaded up. I doubled my position. So my position in Google is bullish on some call options, and I'm expecting it to go higher because of what I see in the technicals, and that's what I'm going to share with you guys today. Right now, the only reason that Google is really down as far as it is because of the macro environment that we're in. It had run up just like a lot of other stocks, just like all of big tech for the first 6 months of this year, and now we are testing lows, testing support, and right now the market's not proven to us that it intends to capitulate and go to oblivion. We're simply in correction mode after a massive run-up, and so I'm still giving the overall trend, the year-long trend, the benefit of the doubt that it's bullish. I'm going to also say that Google is one of the AI kings out there. We've talked about it many times before. Don't get it mixed up or confused. These guys are going to be the ones bringing AI to the majority of retail users, and everyday people who use the internet are going to first discover AI through Google because of their massive market share, which means that they can continue to maintain their moat. I also wanted to share this article with you guys. It said, Alphabet's ETFs, should you buy the dip? And so the big question on this article is Google, is Alphabet ready to be bought right now? So in the article, it outlined the fact that this pullback was as severe as the COVID 2020 pullback in March. And so yes, right now, Google has fallen as hard as it had fallen back in March of 2020. And that would lead a lot to believe that it's extremely oversold, because we know what happened back in March of 2020. We had a massive V-shaped recovery, and it really took off after it got to this level. And I'm going to show you some charts here in just a minute. But after that March 2020 low, Google got a minimum within a short period of time, less than a week. It got a 15% pop and an $8 move up. And so we might have that same opportunity ahead of us. And so there's two more points that the article made. The first was the main point was that their cloud service is what obviously was a concern to the analysts, and they specifically compared Microsoft's success with cloud service to Google's failure. And so it wasn't even that Google had poor numbers with their cloud service, it was that Microsoft didn't, causing a dark shadow to fall on Google. And so the fact is the market may have overreacted. And the second point of this article is that overall, the company is cheap comparing its forward PE with other industry companies, basically pointing out that Google is currently at 29, while others in the industry at 34. And so there's also room there from a valuation perspective for Google to come up from this point moving forward. But let's take a look at the charts. Right now, we are doing what I said a moment ago, which is making higher lows on the 4-hour chart. We want to see that continue or be maintained. If that were to break down, then we might consider cutting our position. We are also on the outside of the Bollinger Bands on the daily chart, which you guys know that I believe when you get this far out that stocks price wants to go home, wants to go back into the Bollinger Bands where it's nice and comfortable. And if we look over on the RSI, now this is what was the most interesting to me. I compared the RSI from March of 2020 to the current moment that we're in on the 4-hour chart. And right now we came down 17.5% versus the March 2020 RSI oversold low was 18%. And so we are more oversold right now than the COVID fear that rocked the markets. Guys, it could be an overreaction on Google. Google is a great big tech company. And if you were ever going to buy, you wouldn't buy the top. You'd probably buy a moment that is this oversold as far as your long-term portfolio goes, but that's not a suggestion for you to buy, sell, or hold. Nobody knows what will happen in these markets, but that's why we look at the technicals for clues and we follow them, not our emotions, not our heart, not the news stories, not the FUD. All right, here's the bottom line on Google. If we get a close back above 124.80, I don't see why this wouldn't push up to 127, 128. That's when I'm going to be selling my calls, is when we get back up to 128, 127. That's where I'm going to strongly consider taking profits, and I should make 100% on a really big play. I'll share it with you guys and let you know how it turns out. And the first people that are going to know when I take profit are going to be the folks over in the Discord. Make sure you check that out. All right, let's get into Amazon, because Amazon is the stock of the day because obviously they're going to be reporting earnings here. Let's just talk about some of the momentum. The momentum is extremely bearish because we had a downward price move with a 37% increase in volume. Now, that's normally very bearish, and it typically indicates a continuation, except for when it's at the bottom of a move. So if it's in a range-bound zone, then it means it's going to continue to go down. But if it looks like it's at the bottom of the move, the stock's outside the Bollinger Bands, it actually can signal reversal. It means that it's actually a bullish indicator because there's been so much money outflowing that there's going to be some money coming back in. And so at the moment, I'm going to interpret the momentum of today, even though it's bearish, I'm going to interpret it as bullish. I hope that doesn't confuse you guys too much. And I'm going to make 3 technical points on Amazon that I think are going to be super clear for you guys. First, it's extremely oversold and it favors long trades today. 2, we have the timing issue I just mentioned of the bullishness of the outflow of money, which could be then seen as an opportunity for money to come flowing back in because of that extreme outflow and that extreme oversold condition. And then 3, we're largely at the bottom of the price range, which means that we've sort of hit the floor. Now, I'm just going to give you guys support. Right now, the only support beneath Amazon is $116. I see resistance above at 122, and then above that at 126. In my mind, the most conservative trade would be watching for any form of a pullback and a bounce on Amazon. That's how I'd be looking into it. I probably would trade this one with shares and not options. My very last thing I'm going to share with you guys is some advice on these overall markets, and I think it should help you out quite a bit. Right now, the markets have had a massive move down. It's sort of shocked and rocked the QQQ, the NASDAQ, and the S&P 500 and big tech. And right now, you want to let the dust settle. Because again, we don't want to catch a falling knife. We don't know how low this is going to go, or whether selling is going to accelerate, or whether some news story is going to come out and just push the markets down harder. You want to be very selective about your investments and your trades, and you want to leave some cash on the sideline to take some opportunity of a bigger move if it occurs. That's the first bit of advice. The second bit of advice is that I'm largely expecting the markets after today to have a little bit of a bounce, but likely to move sideways, and not that they're going to explode upwards just yet. I think they're going to consolidate, build a base, and then they're going to move from there, probably in the first part of next week, Monday or Tuesday. And the last bit of advice I'm going to give you guys, and it's going to be like a technical class, and so I want you guys to draw in and listen very carefully. We're at the bottom of the move, which is an awesome time to be. We're not in the middle. We're not at the top. A lot of big tech has come all the way down to the bottom of its support. And so right now, we need to be looking for fear candles. Those are candles with large wicks at the bottom, sometimes referred to as tails. We want to be looking for those to signal reversal. Guys, keep an eye on the candles right now because they're the ones that are going to give you confidence and tell the story whether or not this is going up. If the candles do not have long tails or long wicks at the bottom, then perhaps there's more room to the downside. All right, guys, that's it for today. Thank you for joining me. Thank you for all the likes. Say hi, throw a heart in the comments. I appreciate each and every one of you guys. Don't leave without hitting that subscribe and that YouTube all notification bell to make sure to get the next video and to hear the outcome of some of these big trades that I'm in. I look forward to the next video with you guys. Peace and blessings. Take care.